This is Eric Mwathe with Mwathe.com after the close weekend, and it is July the 1st, 2011, and we're going to take a look here at the Dow, which closed higher for the week. Up today, July the 1st, 2011, up 168. Had a great five consecutive days to the upside. Let's take a look at what the charts will look like at the end of this week for this end of week analysis on the charts, see what they tell us. Now, earlier in the week, I think it was Monday or Tuesday, I was looking at this area for the market to stall, because what I was looking at, and many people actually came to this week short, and the market surprisingly, but anyway, the market had broken down here last week and had come all the way back, and at some point earlier this week was trading in this area, and it did stall there for a second because this was a test area. It had come back to this break point here and was stalling, as you can see that over there, and then it just blasted up to the upside. I mean, up, incredible strength, you know, little consolidations for a few hours and blasting off, a little consolidation and blasting off. So the market went out of the good close, probably a 500-point gain this week or something like that. Nice gain in the market. Let's take a look at what the other what it looks like on the other charts. We take a look at the New York Stock Exchange on the daily. We draw the red line that connects the RSI highs, this point, that point, we get an area here, which I'm starting to wonder whether we get some kind of resistance here in the market. Now, that's not going to be necessarily mean that that's the high for the market. We could stall around here before we go down. So I don't know the exact point, of course, but I think around here, don't be surprised to see the market struggle. Or let me put it another way, if the market struggles around here with this green line here, then that's legitimate that there's some kind of technical resistance there. Also, it happens to be, like I can see, the back test of this red line. So it's the back test from what it looks like. You know, this line here, red line, the market broke down here about 2 weeks ago, or the beginning of June. It's come all the way back and is back testing that line. Traditionally, or most often, you'll find the market struggle and pull back, and that's what I'm looking at anyway. Let's continue here, and again, now this is now the banking index, the Philly banking index, BKX, and you see the same scenario. If you take this line here, corresponds, that break in that turquoise line corresponds with a break there, the highs, and I'm wondering whether we are going to get similar stalling around here. I'm just saying, seems like the market is at a point where it could stall out around here, not necessarily to the dollar, but around here seems like there's some kind of that's not to say that you can't buy stocks. I'm just saying that broader market itself might be struggling around here, and that's what the charts tell me, and that's what I'm going to report to you. If you take a look at the XLF, what could be nice for those of you who are long, if you want the XLF to move back above 50 on the monthly RSI, which is this chart right here. So the XLF right there, if it can move above 50 on the RSI, we're going to have a good strong month net this month of July. So let's watch out for that. The RSI is very close to 50, just like we had a move below 50 last month. The last 2 months we had a big down drop. If we recapture that 50 level, just like we did here, we get a big surge. If we get another move above 50 here, we could get a positive move in this market. So that's one of the things we can watch for on the monthly chart for the XLF and the financial sector. Now, if you take a look at some of the ultra short ETFs, now they turned bearish. And the reason why, even when the market was down, and even though we saw the market being down the last couple of weeks and didn't play the short side, is because the ultra shorts are not ready to be bought. And here's an example. Take a look at this break here, corresponds to the red arrow. The RSI broke down here. You had this move from about 50 all the way to the mid-teens, even below single digits right here. Now the same thing is happening again. Notice how it broke down back below that line right there, and all that is saying is that these are very bearish ultra short ETFs, and if these ones are very bearish, then the market has a bid. So what I'm saying is, as long as the market does not break down again, we are seeing some sell signals on the ultra short ETFs. Now what I wanted to point out on this chart again is the fact that again the USO had a last 2 months was down, and because it moved below 50 on its monthly RSI. Let's take a look here at the DTO. The reason why I bring that up is because DTO has an RSI, which is this. The DTO is a 2 times inverse crude oil, and the RSI is something we can watch for because it's very close to 50. And I think if it moves above 50 on its monthly time frame RSI, then we have, if it moves above 50, then crude oil could be going lower and the USO could be going lower, and at the end of the day the market could also go lower. So this is something I'm looking at to see how this instrument corresponds with the 50 level of its monthly RSI. Moving on here, now gotta caution you again, we're going back to FAZ, which is 3 times inverse the XLF or the financial sector, 3 times inverse the financial sector. So for every 1 point gain on a daily basis, it moves 3 times the opposite, the financial market. And you see here it tried to break out above 51.22 and failed. And here the caution here is that every time you see a failed breakout on a weak stock that is trying to come back to its glory days, it had a breakout attempt and failed, and that was a sell signal on hindsight. It failed, and you can see it moved all the way from 50 all the way down to 42 in about 1 week. And again you see the RSI here has broken down. The support level that was here, here, and here, and slightly there has been broken down, and no wonder this instrument is in trouble right there, that break. So I don't see life here until they restructure themselves. Again, another reason why maybe the market has a bid, and I know some charts are saying this, but here's a broken instrument. Until it repairs itself, you can't trust it. If you take a look at the same instrument again on a weekly chart, now you see that the RSI formed a double top over the last 4 weeks. Now that double top was a sell signal right there, and you see what has happened this week. Stock is down 16%, and that puts a little bit of a bad weekend if you are short and if you owned that stock. If you take a look at the Indian market, again the same scenario as the markets here, as the INP is the Indian ETF, and you can notice this one is also at an area where I would expect it to stall. Just based on stall areas, the market stalled here, corresponds with the highs. Stalled here corresponds with the April highs. So I would not be surprised to see that this, if it stalls around here, maybe this is also a short-term high. Also, don't forget that the moving averages are upside down. In other words, we have the 50 below the 200 day. That tends to kind of tell you that you want to also be on the lookout for sell-offs. Now copper did give us a buy signal, and at the same time it's moved so fast it could be back to resistance. Why I say that is because the last time it moved below this line here on the RSI corresponds with a high. Now we are back to this level here again. Now, but what I like about copper is that it broke out of its RSI, and it's probably, I would say copper has given the market a broader buy signal. It's not a buy, it's just that it's moved too fast. So you'd rather be a buyer of copper because this breakout seems to be intact. I don't see anything that tells me that it's going to be going down unless it does, and then now we have a sell point, but for now we haven't seen any sell point. Okay, now for the subscriber portion of this video,